God bless America. Hello, everybody. I am the Talk Radio Protege. This is the Protege program. Welcome back from the weekend. Happy Monday. How are you doing? The column that I wanted to look at today is from the Wall Street Journal, and it's about marginal tax rates. Apparently, the clash of closing loopholes and reducing the average tax rates is going to cause marginal tax rates to close in on 100% for very, very, very specific scenarios. And I don't want to start at the beginning of this column. I want to start at the paragraph where they explain what marginal tax rates are, because I think that should have been the first paragraph of this column. If you're going to lead with the headline, marginal tax rates could top 100% for some, then you ought to lead with an explanation of marginal tax rates. So here we go. Marginal tax rates are different from average tax rates. A marginal tax rate is the tax on the edge or margin of one's earnings, and so it reflects what would be the next dollar of income. The average rate is a way of measuring a taxpayer's total burden. So the marginal tax rate, when we start talking about these things, is only on the fringes of your income. And when we talk about marginal tax rates, we're talking about what would happen if you earned just a smidgen more money. And the way that they get to 100%, they're going to explain later in this column. But now let us begin at the beginning. This means that an owner's next $100 in earnings under certain circumstances would require paying more than $100 in additional federal and state taxes. Now, they begin to explain what marginal tax rates are in this second paragraph, but they don't quite get there. A business owner's next $100 in earnings. That means he's earning X number of dollars now. If his profits were to increase by $100, then under certain circumstances, this would require more than $100 in taxes, which would effectively decrease his profits. By increasing his profits by $100, because of the marginal tax rate being in excess of 100%, his profits would actually decrease by $7 or whatever the tax rate ends up being, 107% or whatever. And the way that this happens is apparently because of collisions of special interest cuts that are making their way into the tax bill, the closing of various other loopholes, the changing of the ways that some of these things are calculated, and also these vanishing tax breaks. The way that they write this column, it looks like they're talking about tax breaks that phase out over a certain amount of increasing in your pay, and not the vanishing tax breaks in the same terms that other columns have talked about, where they say that the Republican bill includes tax increases, and what they're talking about are the sunset periods that Republicans under no circumstances intend to allow to happen. Now, there's a lot that happens in this column, so I'm going to try to skip over some of the fluff parts and some of the probably some of the examples and other things. One that I do want to talk about is this one here, the New Jersey lawyer stay-at-home, the New Jersey lawyer example. 3 children and earnings of $650,000, getting $100 more in business income would force the lawyer to pay $105.45 in federal and state income taxes. Now, he means on that $100. He doesn't mean on the $615,000. That would be his total taxes. He means that $100 extra over the $615,000 gets taxed at $105.45. And apparently, if the spouse wanted a job, the first $100 of her wages would require $107.79 in taxes. Now, first of all, is this practical? I don't know. I've never got a raise that I calculated and could see clearly. So I don't know how often it is that a person gets a raise of only $100. They don't tell you how getting $101 more in business income or getting $200 more in business income, or if he got even if this lawyer got a 1% raise, or if he earned 1% more income, that would not be a $100 more increase. That'd be $6,000 more. So they ought, I think, if I had written this story, it would be, what if a person got 1% increase on their income? What if the stay-at-home spouse gets a job? Is she going to earn $100, requiring her to pay $107.79 in taxes? Obviously not. So where is the rest of her paycheck that she's going to earn? Say she goes to work for minimum wage. What is it? $7 and some change per hour, and she works 8 hours a week. Over a month, over a year, how much money is she going to make? I don't know the exact number off the top. Let's make it easier. Let's say she gets paid $10 an hour, and she works 10 hours a week. 52 times 100, $5,200 a year. That's the kind of number we ought to be looking at, not $100. Those are the kind of numbers that we should be working with. The bill is written with pride. Incentives for business owners to shift profit across calendar years, move personal expenses. In any kind of income tax structure, there's going to be incentives to shift numbers around, to do bookkeeping, to make your taxable income number go down. Maybe someday I'll do a video where I talk about the replacement that I would propose. As I was telling my family one time, if I were the king of the world, this this is the tax system that I would implement. Let me know in the comments if you want to see a video like that. Let's go ahead and skip on down through here. With any major reform, there will always be unusual hypotheticals delivering anomalous results. And with any progressive income tax system, with any income tax system, there will always be unusual hypotheticals delivering anomalous results. There will always be the odd case where somebody's earning income that's in one of those gray areas, right on the fence of two tax brackets, and earning just a smidgen more really hurts the guy. In any kind of progressive tax system, this is going to be the case. Another way to say it is these kinds of marginal tax rates scenarios where somebody is getting where $100 of somebody's $615,000 income, which is less than 1% of their income, by the way, is getting taxed in excess of 100%. That's affecting, how many people is that affecting? What percentage of the population is that affecting? We do, or I guess I should say, the country turns on its head, has a conniption fit over the way that 4% of the population is being treated. And it's people like me that say we shouldn't be doing this. So then how is it that we're going to allow ourselves, again, to be governed by the 1%, the 1% of cases? We're going to upend our tax reform plan because 1% of the population will have less than 1% of their income affected badly. To go back to this New Jersey example, if the guy's income goes from $615,000 to $615,100, he's going to lose $5.45 on his income taxes, his federal income taxes. And I know this is gonna come off as, self-righteous or condescending or whatever negative thing that you have. Are we going to not do this tax reform thing because it's going to cost a hypothetical New Jersey lawyer $5.45? Are we going to turn our tax plan on its head because it's going to cost the hypothetical New Jersey lawyer's spouse $7.79? This is a 1.5, according to the CBC, the mainstream media, this is a $1.5 trillion tax plan. Are we going to turn it on its head for the sake of a hypothetical New Jersey lawyer's $5.45? Call me condescending, call that self-righteous, call it whatever you will. I don't see that as a valid argument. Let me check my... Come on now. Let me check my time here. Okay, I got plenty of time left. The Republican bills are trying to reduce both marginal and average tax rates, and for many taxpayers they do. The marginal rates over 100 affect a small slice of households with very particular circumstances. Similar, though smaller, effects occur throughout the tax system. So again, what magnitude are we talking about here? Why are we writing this article if we can't even substantiate that this affects a large magnitude of people? If it was something like even 10% of the population was going to be affected in this way, you're talking about 10% of 65, is it billion people or is it million people? Let's say million people on the concert. You're talking about 10% of 65 million people. So we're at about, what is that, 65,000 people-ish? Or it's a lot more than that. It's like 650,000. There we go. No. I can't math today. We're talking about 6.5 million people. $5 for 6.5 million people. That's a lot of money. That's something that we should be concerned about. 1% of the population even is still 650,000 people. $5 for 650,000 people is a lot of money. Maybe that's something we should be concerned about. But we have no hard numbers that we should be concerned about here. We just have that somebody somewhere is going to get taxed on $100 at over 100%. And this is a big concern, according to Scott Greenberg. Apparently, it's a big enough concern that we ought to upend our tax reform plan. Maybe it's even such a big concern that we should not do the tax reform plan. Okay, here we go. Here's what's important. Or here's something important. Here's how that New Jersey's lawyer, the hypothetical New Jersey's lawyer, who may not even exist, marginal rate adds up to more than 100%. 35% marginal rate on their income range, or the alternative minimum tax. The New Jersey's highest income tax rate, which is 8.97%, are also paying the pass-through business, also paying losing a deduction for pass-through businesses if the income is above 500,000%. The lawyer is paying 3.8% tax on self-employment income. Where did the rest of the numbers go? We've got 3.8%. I'm assuming that you're supposed to directly add in this 23%, 8.97%, and 35%. Okay, so 35 plus 9, effectively 10, 45 plus 23, call it 25, brings us to 70%, plus 4%, 74%. That's not 100%. So where's 100% coming from? That's the end of the column, so it doesn't add up to over 100% by my calculation. 35% marginal tax rate, or the alternative minimum tax, which ought to be repealed. 8.9%. 23%. Remember, I increased all of these numbers to get to 75%. the deduction phases out over 100%. So by the time you get to the extra $100 on the $615,000, you're losing the whole 23%. Child tax credit phases out beginning at $500,000, $50 every $1,000. Where's the percentage number on this? It's like they started telling you how he gets to 100%, and then they stopped before he got there because they realized he didn't get there. I'm confused on that. They couldn't even carry their own example through. So that just goes to show you, in my opinion, more of the dishonest reporting that's going on with this tax reform bill. There was another column, and now I don't remember what paper it was from, but it's linked to on the Drudge Report. Let me know if you want to hear on that one, because I've got an opinion on that one too. That's talking mostly about the different lobbyists and things that are trying to get their input on the tax reform bill. Okay, so here's what I want to hear from you in the comments. Do you want me to cover the second column from today's Drudge Report that's about the tax bill? And 2, do you want to hear my master plan for how I would overhaul the tax system and create what is, in my opinion, more fair, more balanced, and is simpler on the taxes side, on the taxpayer side? Last thing I want you to do before you click off this video is hit the like button, hit subscribe, and ring the bell for notifications, because you don't want to miss a single video. I'm uploading every weekday, even on the holidays thus far, without fail. So come back next time. Until then, good night, and God bless.